Hello and welcome to traders and investors. I'm glad to present to you the cryptocurrency market review presented by analysts and experts from fx.co portal. Here we go. Over the weekend, April 18-19, Bitcoin pulled back slightly amid worsened tensions in the Middle East. However, the broader picture hasn't changed. Bitcoin has been in an upward correction within the downtrend for over 2 months. On the 4-hour time frame, the bullish structure is still intact, which just means the correction may continue. The previous range can now be considered broken, while on the daily chart Bitcoin still hasn't reached the nearest point of interest zone. So, even if the downtrend is about to resume, there are currently no clear entry points. If the 4-hour chart appearance gets broken, that's when bearish setups become relevant again for a potential continuation lower. Geopolitics has supported Bitcoin in recent weeks, but is not a sustainable driver for long-term buying. The market has been pricing in a resolution of the Middle East conflict and the reopening of the Strait of Hormuz. But in reality, the situation remains unresolved. A new round of US Iran talks is expected today, but the outcome is uncertain. The current 2-week ceasefire expires on Wednesday, meaning tensions could escalate again. At this stage, there are 3 possible strategies. Wait for a reaction from the nearest daily FVG. Wait for a new bearish patterns on the daily chart. Or wait for a break of the H4 uptrend near 73,310 USD, and then look for short setups. On the daily time frame, Bitcoin remains in a downtrend. The structure is clarified, bearish, with CHOCH level at 97.9k. Only move above this level would suggest a trend reversal. Since there are no signs of a bullish shift, we expect the downtrend to resume. The point of interest zone for shorts lies in the 79.5k, 81.1k range. A valid sell setup may form there, but it requires confirmation on a lower time frame, ideally the 1-hour chart, preferably with a break of bullish structure. Liquidity below the trend line remains the key downside target. On the 4-hour chart, Bitcoin has formed a weak uptrend for about 3 weeks. The price action is slow and unconvincing, typical for a correction. Until recently, it wasn't even clear whether Bitcoin was still in a range. The only tradable setup for the latest bullish FVG after the breakout. However, further upside is questionable as price is now approaching a bearish FVG on the daily chart. A break below CHOCH level on the 4-hour time frame would signal the end of the current correction and could trigger a new bearish move, potentially the start of the next leg down in a broader daily downtrend. Ethereum has been moving upward on the 4-hour time frame for 3 straight weeks and remains in a daily correction. It is important to note that Ethereum's price action is almost correlated with Bitcoin. So, if Bitcoin moves, Ethereum follows. Simple as that. Geopolitics had a mildly positive impact last week, but it's not a key trend driver. Yesterday, the Strait of Hormuz situation flipped again. The US maintained its blockade, and Iran reinstated its own. Crypto reacted with a drop. Another round of US-Iran talks is set to take place in Pakistan today. Chances of a deal remain low, but some progress is still possible. On the daily chart, Ethereum remains in a downtrend. With an ongoing upward correction. There are currently 3 bearish FVGs. With the nearest one in the 2480-2630 USD range. The key zone to watch. At the same time, Bitcoin is approaching its own bearish FVG, which means both assets could soon generate sell signals after 2 months of correction. The CHOCH level stands at 33.95, the last lower high. As long as price stays below it, the downtrend remains intact. On the 4-hour time frame, Ethereum is in a weak uptrend, essentially a correction within a larger downtrend. Price action remains choppy, with frequent pullbacks. Over the past 2 months, it's become clear how difficult these corrections are to trade. FVGs appear often on this time frame. And many do get respected, so traders can still use bullish setups for short-term longs. However, the key point remains: the downtrend can resume at any moment. That's why we're watching the CHOCH level on the 4-hour chart. A break below it would signal the end of the current upward correction and a potential return to the broader downtrend. That's all for today. See you online soon and good luck.